Yo, what's going on YouTube? Welcome back to another video. Today is going to be a special video because we have reached 100 subscribers. So thank you guys for everyone who kind of recently subscribed. And I kind of just want to make this a video for you guys. I know maybe some of you guys are a little bit curious on how I've been trading and how I've been getting payouts, and this is pretty much it. So yeah, this is going to be a video about my full trading system. As much as I could describe it, I really suck at explaining things, but hopefully you guys will learn a thing or two. And yeah, if you guys don't know anything about ICT, I do trade ICT or smart money concepts, whatever you want to do. So if you guys are a little bit kind of confused on what I'm saying, I really recommend you look into that to kind of get started. If you guys do already trade ICT, this should be pretty straightforward stuff. I try to keep my trading very simple and very minimalistic. I don't want to overcomplicate things. And yeah, let's get started. Basically, I kind of split up my system into 3 different parts. The first being bias, right? And basically what I'm trying to do with bias is I'll usually just use the 4-hour, the 1 hour to kind of form some sort of narrative or kind of frame an idea for what's currently happening in price, right? So I'll see maybe on the 4-hour, the 1 hour that maybe we swept some sort of liquidity and we're starting to see some sort of bullish reaction, right? My bias going into the day would be bullish, right? Or that, or maybe we retrace into a 4-hour fair value gap or a 1 hour fair value gap. My bias should be bullish, right? Because on the higher time frame, that's what we've been doing, right? The market structure is showing me that we've just been bullish, right? So if we get a retrace into a fair value gap, right, and I log on going into the day and I see this right here, my bias should be bullish, right? Why? It's because this entire price leg right here, it has just been pumping, right? I don't want to fight the trend, right? The trend is your friend. So that's basically what I'm trying to do with bias, trying to achieve with bias. The second, and honestly, I think this is the most important, is drawn liquidity. I know a lot of ICT traders mistake the two for being the same thing, but these are completely different. And I'll explain later, a little bit later, but I want you guys to understand that drawn liquidity and bias is completely different. And the reason for that is because our bias could be bullish going into the day, but at the current moment, price is being bearish, right? We're drawing towards some sort of low, or we're moving downwards, and that's not what we expected with our bias, right? Our bias was bullish, but how come we're starting to sell off? Well, it would make sense is because even though we are bullish on the higher time frame, right, we are leaving inefficiencies behind, right? We are leaving inefficiencies. Maybe we have some sort of swing low, and we want to sweep that swing low, right? When we get a retrace like this, right, you should not be scared. You should not be FOMOing into shorts, right? It's because it's just we're drawing towards the current drawn liquidity, right? Maybe there's a swing low right here, right? So let's pretend like maybe there's like let's pretend we're drawing into the swing low, right? And maybe we want to sweep it, and over time, right, we want to see our bias play out, right? Our higher time frame bias, right? We should not be scared of this sell-off or whatever, right? Because guess what? We could also just be retracing into a fair value gap, right? This could just be a retrace into this fair value gap right here or something, right? So I want you guys to understand, we could be bearish even though our bias is bullish, right? But the best trades that you will find is when you get both to align together, right? So what I mean by that is, so now at this point in time, right, after we swept sell side and we've rebalanced to some sort of inefficiency, which is this fair value gap, right, and we're starting to build structure to the upside, where is our current drawn liquidity? Well, it would be the swing high, right? It would be the swing high, right? Because you would want to target swing highs and swing lows and fair value gaps, right? So you would want to frame your trade within this area somehow, right? You would want to enter a trade within this area somehow, because guess what? Because you've already identified your bias going into the day, right? You're bullish, whatever. But now that drawn liquidity is also aligning together, right? Because it shows we're pushing. That's when you'll find your best trades within this area, right? So that's pretty much what I've been doing. And the last part would be just entry, right? And this is honestly the least important. An entry is just an entry, right? Of course there's subgroups like risk management and your emotions and all that, but that's kind of different for every trader. But entry is the least important, and I just want to stress this because you are doing all your analysis, you're spending all your energy and whatever into these 2 bullet points right here, right? The entry should not matter. It's either if you see it or you don't, right? It's either there or it's not, right? And you should not be too stressed about your entry, right? This is the least important, but I'll go over each bullet point right now. So let's go. All right, guys, so now the first part, like I said, bias, right? Like I said, I do not spend too much time on bias. I'm not too stressed about it. I'll just look at the 4 hour or the 1 hour. Sometimes I'll look at the daily just to frame an idea, right? This is just the framework for our trades, right? And what I can see at this point in time is after, let's pretend that this low right here that we swept, right, was some sort of major low. And we're starting to have some bullish reaction, right? We're starting to displace to the upside. And why this is important is because we're not selling off and, you know, closing below this area, right? And selling off and continuing lower, right? We're kind of holding this level, right? We swept this low and immediately shot back up, and we're starting to pump, right? We're starting to pump, right? So now this is important because, like I said, the trend is your friend. Just based off of this market structure alone, even though we're having some sort of like sell off right here, right? This sell off right here, I'm not worried about it. Why? It's because the higher time frame, what's happening? Look at the overall picture, guys. Look at the overall picture. We're just pumping. We're just pumping, right? We're just pumping. So I would not be worried about if we're selling off like this. And the reason I'm not worried is because guess what? There's a fair value gap here, right? There's a fair value gap right here, right? And fair value gaps are just imbalances, right? They're just inefficiencies. So we're gonna want to rebalance the market, right? We want to offer fair value, right? We're gonna want to offer fair value, rebalance the inefficiency before continuing higher, right? Before continuing higher, right? So that's basically all it is, right? So higher time frame, the bias I've identified, I want to be bullish, right? I'm not scared about shorts or whatever. I'm not gonna FOMO into shorts. I would start shorting if we start breaking market structure to the downside, right? Or, you know, if we swept some buy side liquidity up here, right? That would make sense. But let's say our buy side liquidity isn't until maybe like right here, up here, right? I'm anticipating for this to be rebalanced, and then we're gonna draw towards this swing high up here, right? That is important. I want you guys to understand that, right? But yeah, bias. Just take a quick glance on the 4 hour, 1 hour, and I'll go over examples so you guys get a better understanding of what I'm talking about. But now that I have identified my bias, right? I'm bullish on going into the day. So now I would, for bias, right? I would zoom in onto the 15-minute or the 5-minute. It doesn't have to be the 15-minute or the 5-minute. It could be whatever you guys want, but I would just zoom in a little bit just to get a better idea of what is currently happening, right? What is currently happening. So let's pretend this little price leg right here, this pump up, is the same as this little price leg up here, right? And then this little sell off that we're getting right here is this little price leg right here, right? And why this is important is I want you guys to understand that these are completely different. Like I said, these are completely different. Is because even though our higher time frame bias is bullish, you know, you would want to slap along, right? You would want to just buy, right? But that wouldn't make sense because what's currently happening right here, right? What's currently happening right here? We're selling off, right? We're selling off. We're slowly grinding to the downside, right? Where's price currently drawing towards, right? And if you guys know anything about ICT or whatever, we like to draw towards, you know, we like to rebalance price and inefficiencies, right? And how we do that is by retracing into fair value gaps. Either that or we could sweep some sort of swing low, right? Like as you guys can see, you know, we got double equal swing lows. Once we sweep it, right, and we start getting bullish momentum, that's when you'll want to take a trade, right? But let's say we log into the market opens right here, and this is what we're currently seeing at the moment, right? Even though we've identified on the higher time frame we want to be bullish, you would not just blindly take a long, right? It's because at the current moment in time, price is drawing towards this certain low right here, right? This swing low right here, right? And guess what? Maybe let's say we're retracing into a bearish fair value gap as well, right? Everything at this current moment in time is telling you that we are drawing towards this level until you see something otherwise, right? Until the market shows its hand to you that it wants to be bullish, you should stay away from the shorts. Either that, or if you know we're bearish, right, at the current moment, even though if you guys are able to understand that, yeah, on the higher time frame we're bullish, right? But at this current time and price, we're bearish, right? And we're currently drawing towards this level. You could take a short riding into the drawn liquidity, but obviously that's a little bit riskier. It's best if you guys just wait for both of these to align together, right? To take a trade, right? When both of these align, that is when you'll find your best trades. So with that in mind, right, we will wait to see how we react at these levels, right? Like I said, because even though we swept sell side or we rebalance price, that doesn't mean we have to, you know, respect it. Maybe there's like another fair value gap down here, and then we hold this one instead, right? So you'll wait until the market shows its hand to you. That's when you'll execute, right? And like I said, the best trades you'll find are when both of these align. So you'll want to try to find a trade within this area, right? Because guess what? Now that this drawn liquidity has been taken, right? Now that this drawn liquidity has been taken, right? We were bearish within this entire price leg right here, right? What happens right here? What happens right here? After we swept this sell side level and after we rebalance into this fair value gap, right? After we've rebalanced into this fair value gap, we're getting some bullish momentum now, right? We're getting some bullish price action now, right? Now, what is the current drawn liquidity, guys? Now, what would be the current drawn liquidity? Well, it would be the swing high, right? That's where price is currently drawing towards, right? So now that, like I said, our higher time frame, our bias was bullish, right? Our higher time frame, our bias was bullish. That's check mark number one. Cool. Now that drawn liquidity, now that we're over here, right? Now that we're over here, and you know we're starting to push. Where is the current drawn liquidity? Well, we're trying to push towards the swing high, right? So now that these have both started to align with each other, that's when you'll try to find a trade, right? So like, you know, if there's a retrace over here, whatever, or, you know, get another liquidity sweep, this is where you guys would want to take a trade, riding into the drawn liquidity, right? Some sort of target. You guys need a target, right? Drawn liquidity and target are the same thing, essentially, right? And I kind of just want to go over the entry models now as well, and I'll obviously show you guys examples so you guys get a better understanding what I'm talking about. So yeah, but this is the most important step, and I want you guys to understand this, is because there are two different types of drawn liquidity right here, right? Two different. Right here, if we were split this line, like split this in half at this moment in time right here, right? Everything within this price leg, the drawn liquidity was bearish, right? We were trying to sweep this low. We were trying to rebalance into this fair value gap, right? But anything past that, right? So I would say until like maybe like right here, right? The bias, or sorry, the drawn liquidity would have been the swing high, right? Is because now it's showing, or sorry, price action is showing that it wants to draw towards this level, right? So you're gonna want to ride the momentum. So any retrace, like I said, you guys you'll take it, right? And now I kind of want to go over the different I guess like the 3 different entry models that I have. But yeah, I'll mainly use the 1 minute to execute. So I know this looks a little bit confusing right now, but you guys will definitely get it. So I'll kind of just show you guys. So the first entry that I have for you guys is just going to be the inversion, right? Just the close above a bearish fair value gap. So let's pretend like right here, right? Let's pretend right here, and we have a bearish fair value gap right here that opened up when we took liquidity, right? Once we close above, right? Once we close above this bearish fair value gap, right? Because typically when you see a fair value gap, right? Like a bearish fair value gap, right? So let's pretend, you know, we're kind of selling off, whatever. Wait, no, let's not do that. Let's pretend, yeah, like I said, we have a bearish fair value gap, whatever. When you see a bearish fair value gap, what you would expect, right, is for us to hold this level, retrace into it, and continue lower, right? But that's not what happened right here, right? Instead, we disrespect it, and close above, right? We disrespect it and close it above, and what that's basically saying or telling you guys is a possible reversal is coming soon, right? I don't like this entry too much just because sometimes it's easy to get faked out and wicked out and stuff, because sometimes this is a little bit too early to enter. What I would really recommend is either you guys take the entry number 2 or number 3, and I'll kind of explain that right now. So entry number 2 is basically just a retrace back into the inversion fair value gap, right? Because once you inverse a fair value gap, that basically acts kind of like a fair value gap, or you know, like a normal fair value gap, right? It could act as support now, right? So once you retrace into this level, right, that'll be a good support level sometimes. Mostly it's even better if you guys get a BPR, right, a balanced price range, when, you know, this bearish fair value gap, right? So this bearish fair value gap that we closed above, right, while we were you know, closing above, this candle right here opened up another fair value gap in its place, right? So this little area right here, right? So let's pretend this is like the fair value gap. This candle had a fair value gap within it, right? This little level right here, right, where these both overlap, when you retrace into it, that's a really nice level of support to send us higher, right? I would really prefer this because it's a little bit safer, because now maybe there's a market structure shift up here, right? So now it's truly showing that a market is currently reversing. But my favorite entry, to be honest, is riding the trend, right? Everything is just riding the trend, waiting for a clear drawn liquidity, right? And at this point in time, entry number 3 really gives that, is because let's pretend over here, right? Like I said, you get a retrace over here, right? Like you guys already remember what I said, right? We get a retrace. Any retrace that you guys get would be ideal, right? And riding into the drawn liquidity, that's important, right? If you guys have a clear drawn liquidity, taking this, any fair value gap that you see is safe. Is because you're riding the momentum. There's a clear drawn liquidity that we are pushing towards, right? That would be ideal. And this has honestly been my favorite type of entry recently, and most of the trades I've been taking. Sometimes I'll take a inversion, but for the most part, it's entry number 3, is because, like I said, we have a clear target, right? To swing high, right? We have a clear swing high target that we're aiming towards. Our higher time frame bias is bullish, right? So everything, now that these both align, now that these are both aligning, that's when you're gonna have your best trades, right? So once we retrace into a fair value and show that we're respecting that level, and and basically how I know that we're respecting that level is if we get a strong candle close, right? Then I'll take the trade and ride into the high. So yeah, I'll kind of hop onto the charts and show you guys an example right now. Okay, so now that we're in the charts, I kind of want to go show you guys everything from top down, from bias, drawn liquidity to entry. I did end up, recording this already, but I wasn't actually recording, so I have to like make this video 2 times. My throat kind of hurts, but yeah, I'll try my best to explain. So let's go into the 4-hour and check out what's currently happening, right? And basically what I'll do with the 4 hours, I'll draw out possible targets or possible drawn liquidity. But what you could, guys, what's pretty obvious, right? Anyone could tell this, even if you're not a trader, we've just been bullish, right? Guess what's been happening right here, right? We've just been pumping. Even this little price leg right here, right? We've just been pumping, right? But if you zoom in and really see what's going on, what is happening right here at this current moment? Our higher time frame bias is bullish, right? It's just based off of like I said, I don't really pay attention too much to bias. I'm not too stressed about it, but it's just a quick glance, right? What is currently happening, and what I hope you guys are able to see, is we've just been pumping, right? We've just been pumping. What's happening right now is we're retracing into a fair value gap. So I want you guys to understand that, yeah, although our higher time frame bias is bullish, the current drawn liquidity is bearish, right? Why would it be bearish? Is because we're selling off to rebalance into a fair value gap, right? An inefficiency, right? Or, who knows? Maybe there's like a swing low within this fair value gap that we're also trying to sweep, right? We're trying to sweep that liquidity before actually heading higher, right? Before eventually heading higher, and aligning ourselves with the higher time frame bias, right? So let me just zoom in and kind of show you guys. So now let me check out the 1 hour to see, kind of get a better understanding. So I could see that, okay, like I said, maybe could have been the possible swing low, right? We also have another hourly fair value gap that we could be retracing into and trying to fill, right? But I'll also be drawing out any significant drawn liquidities, right? Drawn liquidities would be like any equal highs, relatively equal highs, just any obvious swing high or low, right? So yeah, going on to let's check out the 15-minute real quick. And what can we see right here? Actually, I guess it's not too clear right now. The market replay on the trading view is not too accurate, but what we can see, let's just draw out the swing low, right? We have a possible swing low. It's almost market open. We also have London lows right here. But until our bias aligns, right? Until our bias and our higher time frame both align, or higher time frame bias both align, and our drawn liquidity align, I will not be taking a trade, right? I will not be taking a trade. So let's kind of just play out market open and see what happens. Let me check out the 5-minute for you guys. Let me play zoom forward. Okay. So this is going to be a news candle right here, right? 8:30. I believe this was PPI or CPI. And what I want you guys to understand at this point in time is, what is the current drawn liquidity? We don't know yet, right? It's kind of unclear, right? It's kind of unclear, but we'll just mark out possible targets, right? So if we are bearish, I have the swing low marked out, right? So maybe we want to sweep this level, right? Maybe we'll want to sweep this level and then build structure to the upside, right? So once we see some bullish momentum over here, that's when we'll take the trade, right? If not, where's another possible target if we are still continuing to be bearish? Well, I guess I won't get too, you know, I won't go that, go too far into the future. But let's just kind of just check out what price does right now. So after news candle comes out, what I can see is we're holding this bearish forever gap and we're continuing lower, right? Why is that, right? Our bias is bullish, right? So we should be bullish, right? Why wouldn't you slap along? Well, if you guys slap along, you guys are just, I hope you guys don't slap along right here, is because price is screaming to you that it's being bearish at the moment, right? We're holding this bearish forever gap, right? We have a clear target. Which would be this swing low, right? We're rebalancing into a fair value gap, right? An hourly and a 4-hour fair value gap, right? You should not be pressing the buy button yet until market is showing you that it is bullish, right? So let's just kind of see a little bit more what happens. As you guys can see, we're continuing to hold bearish PD arrays, right? Hold this bearish fair value gap, right? So at this point in time, right? Now that we have swept this low, now that we have identified that we have swept this low, will we continue to push? That is what I'm asking myself. So let's zoom forward a little bit more. No. Okay. So now that we're continuing to sell off, where is my next draw on liquidity? So I'm gonna get rid of this line, right? Because this doesn't matter to me anymore. Do we have I asked myself, do we have another target? And we do. And what would it be? This swing low right here, right? These swing lows that we have over here, right? So now I'll draw this out. Oops. Let me there we go. And now I will see how we react, right? Will we continue to draw into this level, right? Like I said, you guys don't have to only play the longs, right? If you guys like know the draw on liquidity, right? You could ride you guys could take a trade riding into liquidity, right? Riding into the draw on liquidity. But for me, my best trades are when both align. So I will wait until price shows me that it wants to be bullish. Like I said, I'm not scared by any of this because I believe the draw on liquidity is this swing low, right? That's where we're aiming towards. So let's kind of just play price action out. And boom. Okay, so just like that. So now that we swept this low, right? Now that we swept this low and it is now market open, believe like right here. So now it's market open, right? I still don't know if this is the level where we are going to reverse, right? So now I'll have to wait for price action to truly tell me that we want to be bullish. And the first indication of that, would be if we inverse this bearish fair value gap right here, right? And we close above. And you're probably asking yourself, you know, why not this one right here, right? Why not this fair value gap, right? Well, we don't know. You wouldn't enter, let's say right here. So let's see. Okay, right here. So this candle, right? Why would you not enter off of this fair value gap, right? Well, you know, like Andrew, like we closed above this bearish inversion right here. Like why can't I take a trader here? Is because you don't know if this bearish fair value gap is gonna send us lower, right? Like I said, it is still too early to tell, right? It is still too early to tell. I don't know. Even though our hard time frame bias could be bullish going today, the market is not always going to do what you want, right? And something unexpected could happen, and you know, we could just be bearish for the rest of the day. I don't know yet, right? And how I will be able to determine if I'm bullish is if we close above, right? And show me that a possible reversal is coming. So let's see what happens. And boom, just like that, right? So now that we've disrespected this bearish P array, right? This is the first entry model that I was talking about with you guys earlier, right? When we close above in an inversion fair value gap, right? So because there was two right here, I would wait for the highest one to get closed above to truly be safe, right? So now that we've closed above, right? Now that we've closed above, we need to mark out possible draw on liquidity, right? Where can we ride the trade into, right? You guys need to plan this out beforehand, right? Where do we need to plan, you know, where are we riding our trade into, right? So possible nearest drawn liquidity, right, is the swing high, right? Why is this important? It's because there's a lot of relatively equal swing highs that we could target, right? And ultimately, our main bet would probably be this wick right here, right? Because wicks are great areas for liquidity. We're gonna want to target that area, right? So, like I said, first entry would be right here, and you're gonna want to put your stop loss below the inversion, right? And try to aim for here. Put stops, break even, whatever you need to do, right? Take partials, what I would personally do is scale half right here and put break stops, break even, and try to ride till these highs, right? That is what I would personally try to do. So let's kind of just see what happens. And boom. Okay, and right here, guys, this is what I was talking about. This is going to be your second entry. This is going to be your second entry. And why, you guys, I hope you guys remember what the second entry would be. It's when we closed above the inversion, right? And we create a fair value gap in its place, or we retrace into the inversion, right? So you guys could enter off of here. I would honestly personally wait for a nice strong candle close before I enter a trade, but let's just kind of see what happens. And there it is. So I would honestly enter off of this candle, but you guys, if you guys are more comfortable like wanting a better, tighter risk and stuff, you guys could enter within the fair value gap. I personally would enter up here and put my stop loss like right here. Honestly, it's just best to have your stop loss below the inversion though, and still target the same high. But like I said, stop loss is right here. Or sorry, not stop loss. Your break even is once we take this swing high or whatever you need to do, scale partial. Because guess what? That's already about 10 points, right? That's pretty much all you need. 20 points if you entered off of this first trade. So let's kind of just see what happens. Or I guess I'll bring these back so you guys can see. So these are our two trades going on right now. And boom. So now as soon as we take this swing higher, right? Put stops, break even, whatever you need to do, or if you guys are still confident in the trade, whatever. And let's kind of just continue seeing what happens. So right here, right? This is going to be the third entry. This is going to be the third entry right here, right? Where I remember when I said I'll take when both drawn liquidity and the higher time frame bias is clear, right? And it's a trend trade, right? So now there's a clear drawn liquidity, which is this swing high, right? Market is not showing us that we want to be bearish, right? It's showing us that we're clearly drawing towards this level. Then I would try to enter a trade right here. So once I see a strong, nice candle close right here, I'll enter off of that. Okay, so that's a decent candle close, and it's showing me that we want to respect this level. So I would put my stop loss right here and still aim for these highs, right? So now that we have three positions going, right, guys? I hope you guys see. So the first entry was right here. Second one was the retrace into this fair value gap. So now we have another one going right here, right? So let's kind of just see what happens. Okay, and we get stopped, right? And that's completely fine, right? You're not gonna always win. So I hope you guys, I'm not gonna, I didn't play the price action out before, so I didn't know truly what happened. But if I was trading this live, I would have been, I guess I would have gotten stopped out, and there would have been a trade I would have 100% execute on and had no regrets on, right? Like I said, you guys should just be executing on what you see and not what you think or whatever, right? So see, we get another retrace. So we get another retrace here, right here. Do we get a strong candle close? And we do, right? But the reason I am okay continuing to, keep buying, I don't care how many tries it takes, is because I have a clear drawn liquidity, right? I have a clear drawn liquidity. It just, as you guys see, there's not really much follow through. We start chopping right here, and that's completely fine. And I get stopped out again, but I'm gonna keep doing it as many times as I need. Obviously, you should have risks, risk parameters in place. Like, if you take two trades and they're all L's or whatever, stop. Or if you lose more than $400 going into the day, you should just stop as well. But for me, let's just kind of see if the model works out, right? So we get another retrace. Okay, didn't quite. So here's our retrace into this fair value gap. Do we get a strong candle close? And there's my strong candle close, showing me that we want to respect this level, right? And like I said, I'm still aiming for this high, and let's continue to see what happens. And boom, just like that. And I know it wasn't the cleanest, right? We took two L's right here, but this is, I want to show you guys the reality of trading. You're not always gonna get the perfect sniper entry, or you're not always gonna get the follow through you want. But as long as you do this over and over 100 different trades, I guarantee you in the long run it will be profitable, right? And for me, these were 100% trades I would have been happy taking a loss on, right? Yeah, it didn't. I honestly wish I could have just nitpicked and showed you guys the sniper entry, but that's just not the reality of trading, guys. It's not the reality of trading. I'm not gonna try to sell you a dream or any of this. These were 100% trades I would have taken live, and I'm happy. I'm honestly happy with these losses right here. They were everything I looked for going into the trade, and it just didn't work out. But eventually, it did work out, right? Like I said, I wish I could have showed you guys the most perfect examples of the trades that you guys could have taken. But I want you guys to be as, you know, I want to prepare you guys for, you know, what's truly, what the market truly has to offer. And yeah, so these are all the different trades that you could have taken. So trade number 1 being the close above this inversion, right? Trade one being the close above the inversion. Right here, right? Second trade is the retrace, right? I personally would have taken the strong close right here and then maybe stop loss right here or below here. So there's your second trade, riding until those highs, right? So you wouldn't have been stopped out. Third trade, I tried this one, but it didn't work out, right? Same with this one. This one didn't work out, right? This retrace, strong candle close, it's everything I look for in a trade, so it's completely fine, all good. But it eventually did work out, and boom, there you go. So yeah, that's pretty much all I have for you guys. That's my entire trading system in as much detail as I could give you guys. And I hope you guys learned a thing or two. If not, you know, if you guys have any questions, make sure you leave a comment down below. And if you guys are interested with trading any of these futures prop firms, I'd appreciate if you guys use my code. I'll leave a link down in the description for both My Fun Futures and Apex if you guys are interested with trading with them. And I'll see you guys soon. Peace.
Subscribe!